I'd say most of the top-down data is actually reasonably benign, as you just mentioned about the CPI data, or positive in most set of the senses. On the monetary framework, that's certainly true. We're having inflation coming down to normal-ish levels, stubbornly just above, but reasonably low levels. You're seeing growth coming through, and some of the growth indicators pointing to sort of forward-looking growth numbers being quite strong. So a kind of very soft landing or no landing sort of scenario. But what you're seeing, not from the full bottom up, but when you're listening to companies, we're seeing a lot of demand weakness. And you've seen a lot of the lower income consumer weakness across companies like Dollar Tree and things like that in the States. As of last night, you're seeing higher end consumer weakness with LVMH. The powertrain of this market is AI and chip manufacturing, and we're seeing demand weakness there now as of yesterday from ASML. So the top down paints a very benign picture. I would say a slightly surprisingly so one, given the bottom up news flow that we're seeing from companies that we own and don't own, like I just mentioned.
So given that disparity between bottom up and top down, is this a good entry point for some of the names that you either are looking at or want to top up on at the moment, or actually we good to wait? I mean, just looking at the FTSE on itself, it's done nothing since the Labour government was elected. For all of the concern and the fretting about what they will or won't do in this budget coming up and what the Fed might do, and actually UK markets have done zip for about 6 months.
And about 15 years. It's, as you know, I mean, the UK market is quite unrepresentative of the UK economy. So it is a proxy because people trade it still like that. But I think 85% of the earnings are overseas, and it's kind of banks and miners. And that mini commodity cycle we saw post-COVID has definitely been waning. Oil prices back to sort of $70. So one of the big sort of drivers of the FTSE is that, and that's been a bit softer. I mean, look, I think we've been trading more in the last sort of 3 or 4 months than we have in the last few years in general. So there are a lot more opportunities coming up. And I do think there's going to be a lot more intra-stock volatility. And I think markets in a broad sense, well, in the US, are overvalued and basically pricing in earnings that is not going to be realized as margins keep getting chipped down as costs inflate. So I look at the US markets trading at all-time highs and see great risk and asymmetry to the downside at a market level, where obviously the momentum and liquidity is seeing the opposite and continuing to push them straight through to new all-time highs. So for me as a stock picker, yes, it's actually been a really interesting and opportune sort of, 4 months, adding new stocks that are out of the limelight, that are having these sort of wobbles, and hopefully will play well over the next sort of few years.